Bloomberg Intelligence thinks that stronger growth in mainland Chinese visitors still won't be enough to make up for reduced spending by residents for the rest of the year. Let's bring in our senior analyst, Catherine Lim, joining us now. And Catherine, just tell us what the outlook is when it comes to retail sales for the fourth quarter here in Hong Kong, and what are going to be some of those drivers that are worth considering for next year?
Well, Yvonne, from where things are right now, Hong Kong retail sales needs to go up 20% in fourth quarter to actually make up for the shortfall that we have seen in the first 8 months of 2024, and it's likely still going to be a decline in September. So going into the fourth quarter and 2025, really watch for the currencies. I do think that, this is one of the factors that we need to factor into consideration, not for the Chinese coming into Hong Kong, but really I think one of the biggest drag that we have seen on the Hong Kong retail sales was the northbound traffic, i.e. from Hong Kong to Shenzhen and to the Chinese cities itself, where services expenditures are generally cheaper in Hong Kong.
Okay, well, let's put that together with, I guess, some of the short-term flows, Catherine, we've seen. I think the data out of the government is a 35% increase in mainland arrivals in the city. Now, is this good news for retail sales? I guess another way of asking that is, did the same amount of people spend the same amount as far as that growth rate is concerned?
Well, that's a good question. And I really don't have that answer right now because, if I look into the China stimulus, the exciting things that, we've actually seen into the last week of September, I think that was a little too late and it may not have been factored into the National Day spending as we speak right now. I think over the weekend, and we're looking for some of the numbers to come out over the next couple of hours itself, even travel spending seems to have been cut back a little with, reductions in prices for hotels as well as for some of the travel budgets. So, I don't think that's really going to translate into the retail sales numbers for the first few days of October, and we really have to see what happens over the next couple of days. And don't forget, we're coming into the Singles Day shopping festival too, and I'll be surprised if anyone is actually spending ahead of this big bazaar.
Yeah, why not? If discounts are coming, right? And I think that's a really good analogy for things like the housing sector, which that's another door that I unfortunately opened. Anyway, Catherine, thank you so much for staying up. Catherine Lim, Bloomberg Intelligence senior analyst there, just getting us up to speed really in the status and the snapshot of the retail sector, which is really part and parcel to the conversations around F&B here in the city, and this massive flow of people that go north on the weekend, spending their money in the likes of Shenzhen and Guangzhou, for example. What does it mean for the city's F&B industry? Joining us here in set is Kwai Fong Group Chairman Allan Zeman, often referred to as the father of Hong Kong's nightlife area. It's nice to see you, Allan. It's been a while.
Good to be back.
The issue, some of the headlines we see,
yes.
Restaurant this closing down, restaurant B closed. So that's what we see on a headline basis. It's an issue where almost everyone has a theory. So what's the prognosis from people like yourself?
Well, I can tell you what a difference a week makes. The Golden Week in China, actually this past week, we had 980,000, the last 5 days, 980,000 mainlanders coming to Hong Kong. And basically, they spent. Shopping malls were up about 8%. So Kai had reported they were up 8% in theirs. A lot of people buying. Well, restaurants are very, very busy. I mean, there were lineups if you went around Hong Kong at the time, which you haven't seen for a long, long time. And so restaurants are very, very busy. And then we had they were buying jewelry, they were buying gold, they were buying cosmetics. So taking a lot of that. I even saw some people in Causeway Bay had spent $100,000 on some luxury goods and $200,000 on some bags and that kind of thing. So, obviously the stock market in China, the wealth effect, it was really, really causing a lot of people's strength and as well, China real estate was 25% of China's GDP in the past. And the problem was that because of the too much real estate on the market and all the problems. And so, and real estate is a wealth effect. And now with all the stimulus package, and there's, I think, 800 billion won that's ready to go into the stock market, in China. So people feel better. And they've also, the lower mortgage rates in China gives people also wealth effect. Guangdong lowered all their taxes, their different restrictions on real estate.
Yeah.
Same thing in Shenzhen and in Shanghai. And so people are now starting to buy. And there's just a few real estate deals done in Shanghai, and they move very, very, the higher end, and they move very, very well. So that's the beginning. And the same thing's happening in Hong Kong. Hong Kong, you saw there was sellout in Kai Tak in Sun and Kai.
After massive discounts, though,
massive
right?
discount. Yeah, I saw one of the owners
20%
last night,
discount.
and they and he said they lost money on everything they sold. But it doesn't matter. It starts, and that helps a lot, and that helps the retail market. The big problem we have in retail, obviously, as Catherine has mentioned, on the weekend. About 200,000 people leave Hong Kong and go to Shenzhen, which is really 35 minutes away, 40 minutes away from Hong Kong, and 40% cheaper for restaurants, for spa, for hotels. Everything is it's a new world for them because of our strong Hong Kong dollar. That's really hurt Hong Kong a lot. I mean, the peg to the U.S. dollar, obviously, we've had it for more than 40 years, and it's always been great stability for Hong Kong. But in this case, because of the high inflation in the United States, that's really hurt us.
Is that a new normal, you think, Allan, in some ways? Like a short-term phenomenon?
Well, I don't think it'll 2026. I don't think because, yes, they lowered the interest rate by 50 basis points, and that's the first point. I'm not sure if it'll continue. It won't go 50, I don't think. I think it'll go 25 basis points if they do. So I don't see it before 2026 because we don't have inflation in Hong Kong.
How does Hong Kong compete with that then, if everything there is so much cheaper?
It's difficult, I can tell you. It's a new world because we're suddenly discovering China, which nobody in the past wanted to go to. And all the products that they offer are very, very good, in fact. So we've got to step up our game. As well, in Hong Kong, I can tell you from Lan Kwai Fong, the area that I control, it's a different change. We were mostly expat in the past, but during COVID, 200,000 people of expats left Hong Kong because they didn't want their children to do online learning and 21-day quarantine, all that, and many did not come back. And so that changed, and then, of course, 150,000 locals got B&O passports. They went to the UK. So that changed the dynamics. But I sit on the Hong Kong government's board for human resources, and that helped a lot because we had new talent schemes, and basically we started with 35,000 with certain criteria to attract 50 international, 50 mainland.
Well, that didn't happen.
Well, what happened, as of 2 weeks ago, we got 346,000 applications with different different talent schemes. And with that, we've approved so far 240,000. And so far to date, 143,000 mainlanders and their families have moved to Hong Kong. So you see the schools with their kids, the schools are full again. They're renting. The rental market is the highest it's ever been. They're not buying property in Hong Kong. And so that's changed. And for myself, we're changing. We're now leasing to a lot of new mainland companies. And that's really, I've got a Michelin star restaurant, one Michelin star restaurant, Chengdu from Sichuan, from Chengdu, Sichuan. I've got Meike TV, which is a public company. They have 500 in China, and they've got it's publicly listed in China. Very, very popular. The first one going to be in Lan Kwai Fong. All the newspapers, everybody's very excited about that. I've got Chow Chen Min, which is a hot pot restaurant from Chongqing, and these are all new imports. I've got more coming on the way. So because the demographics have Hong Kong has changed. We are international. We have our one country, two systems. We have the common law system that we practice and all that. So Hong Kong will remain, but we're going through changes.
Well, the target market. I mean, you mentioned, I was mentioning, in terms of the absolute number of people
Yes.
that have come via the talent schemes, the government, if not exceeded that target. The makeup, though, wasn't quite 50-50, to your point. The vast majority
95% mainland.
Do you see the industry needing to do what you guys are doing, which is pivoting your portfolio companies, the F&B, catering to the mainland
When
Chinese?
you're in retail, you have to cater to who the customer is. And basically, that is the new customer, whether we like it or not. We're in a geopolitical world at the moment, and so many people, Hong Kong maybe doesn't have the reputation that we had in the past, which is wrong because Hong Kong is booming right now. But we're attracting, less tourists, international tourists, as we know, mainlanders, as we can see, are coming back again. But and many of the aside, if you asked me a week ago, before the Golden Week, I would have told you the mainlanders coming here were different. They weren't spending money. They're experiential tourists. They were taking pictures of their, of Lan Kwai Fong's street sign every day. We get
David's
200 of them.
It's Yvonne and I joke about this. I mean, where I live, which I think will go largely, we'll keep largely private. The crowds are just different. People are not buying their beer, but they're standing by the water taking a billion photos.
Exactly. And so it's changed. And so Hong Kong needs to change, whether it's the retail, because I'm doing 3 projects in China right now. I'm doing the Lan Kwai Fong because it's a very famous brand in China now. Doing one in Xi'an, one in Chongqing, and one in Sanya, Hainan, which is very, very good. And so I asked the people in mainland, why aren't you coming to Hong Kong? Because what for? It's cheaper in China today because before COVID they took the luxury tax off.
Right.
And so and because of our high dollar. And so they think that it's better in China.
I was going to ask you about reports of the Hong Kong government lowering the liquor tax.
Yes.
Have you heard any conversations about this? Do you think it's enough to revive the nightlife here?
I don't know if it will revive the nightlife, but definitely it will be coming down. You'll see it in the policy address. I'm part of John Lee's advisory committee. I can't say much, but it will be coming down. How much remains to be seen. I was actually one of the ones helpfully responsible for the wine tax coming down to 0, and so I have a lot of experience with that because the income tax that the government gets on wine or spirits is very limited. Yeah. So why not? When we reduced the wine tax to 0, we became one of the wine capitals of the world. All the auctioneers are out here and all that. So why not do it now? Well, for the spirits, and so hopefully, that market. It will happen, and I don't know if it'll go to 0, but it'll be whatever it is. It'll be a reduction, and I'm not sure everybody will go out and grab a drink because of it, but I think that it'll help.